We're going to watch this video called I Ranked the Moat of Popular Stocks by Joseph Carlson, and we will rank the moat of them as well.
That investors discuss is the moat of a company, how strong or weak it is. For every investment you make, you want to buy companies that have great moats. They're competitive advantages. It means that other competitors.
By the way, I'm running this at 1.25 speed, and it already feels too fast. Let's go back down to 1.0 speed. Okay.
Can't compete with this company. Well, today we're going to be looking at 33 of the most popular companies in the market and ranking their moats. We're going to be putting them into 5 different categories. I have them listed out here. Stronghold, the very top. These are companies that have such strong competitive positions. The durability of their income, the predictability is so good that they're virtually unassailable.
I'm gonna have to go get my my bullhorn because I can feel a profits follow price coming through the bullhorn real quick, right quick. Now, why do I say this? Right, I don't know where he's going to go with his stock picks, and that's fine. And it's going to be very interesting to learn. But let's say, for example, that he pulls up AMD. AMD right now is in a big, ugly, nasty, obvious downtrend. On May 7th, it was in a big, obvious, beautiful uptrend. Before that, it was in a big, obvious, nasty downtrend. And I would bet during this time, this moat or whatever he's going to claim it as. Now, granted, I don't know if he's going to pick on AMD or not. We will cover that. I would bet that that moat, and as far as cash flows and whatever he's got, hasn't changed all that much. But you're not going to get paid on that moat if prices are screaming down. If prices are in a bearish trend, you're only going to get paid when it is a bullish trend. I'm just saying. I didn't say it. Mike said it. I didn't say it. All right, let's watch this video together, and I'm gonna go grab my bullhorn.
Then below that, we have Castle Wall. Incredibly strong companies, but not quite in that category of the stronghold. Then below that, we have the Wood Fence. These are companies that are more in the average size with normal moats, not the strongest, but they have some competitive positioning. Then below that, we have a Picket Fence. These are companies where they might have some moat. And below that, we have an Open Field. Those are no moat companies. And we'll be looking at all of these stocks, all the most popular stocks in the market that you're looking at and discussing, we're going to be ranking.
It's a buttload of stocks, just saying.
Now, to start things off, we're going to be starting with, it's Duolingo. This is a stock that I bought a 2% position.
All right. I want to know in the chat, tell me right now, what is your Duolingo streak? Mine is 875 days. Tell me what your Duolingo strength is right now in the chat, and what language.
And everyone went crazy online. Now it's one of the most discussed stocks online. In fact, in Qualtrim, it was the #1 most searched stock last week. So I don't know what I started here, but Duolingo has now made it out to the masses. When we look at Duolingo, and I try to be honest with the moat here, there's a couple things I can look at. First of all, Duolingo is growing very fast.
Okay. Right. Remember, he's going to be looking at all these financials, all these fundamentals. Keep in mind, these numbers he's putting up here are reported 4 times a year. Let's go look at Duolingo. Duo, D-O-U-L, or D, hang on, maybe D-U-O-L, D-U-O-L. D-U-O-L. Steve says, not even a food stamp. Korean 340 days, Spanish 20 days. That's awesome. Dana gave up French for 0 days. That's super cool. Oh my gosh. This looks like donkey doo-doo. Look at this. All right. So OVTLYR 9 has 5 of 9 lit up for you. You've got your market trend, your market signal still on a buy. Market breadth this week though. The sector, this is the tech sector, has rising fear and greed and rising breadth. So the sector looks pretty good. However, the stock has a obviously bearish trend, has a sell signal at some point. We'll have to see how far back that goes. And it's been getting more and more fearful. It's down to 3. Wow. The scale of fear and greed goes from 0 to 100. It's down at 3. Goodness great. Look at that sell signal, by the way. Like literally the top candle all the way down. Okay. D-O-D-U-O-L. Now, granted, I'm not saying that he is saying that it's time to buy this stock, but here is one reason why. Let's conceptualize this. These numbers come out 1% of the time. The other 99% of the days, the charts are telling you what is happening to the stock. By focusing in on these, in my opinion, pointless fundamentals, useless ideas, you're not going to get paid. So let's see how he ranks this moat in Duolingo.
It has 40% revenue growth. The subscription growth is growing 47% year over year.
40% revenue growth, 46% subscription growth. I don't think people care. In fact, I would bet the people who own Duolingo are pretty hella pissed that people don't care about these subscription growths. Well, I'll tell you, they do like this order block down here. Been providing a little bit of support. And maybe, just maybe, this will be the bottom.
Their daily active users are growing year over year. Their monthly active users are growing year over year. Their paid subscribers are growing year over year. Now,
okay, I don't want to beat a dead horse, but do we see why? Fundamental. Tell me in the chat if you can understand with whatever way you want to put it. Just put yes, or I see why fundamentals don't matter, whatever the case is. Every one of these charts looks big and beautiful and rising. This chart looks like a hot pile of monkey donkeys. It's awful. This is a terrible, no good, very bad chart. And to Steve's point, where's Steve? Where'd he say that? I wouldn't even buy this with your food stamps. Like, this is seriously a terrible, terrible chart.
Now, growth doesn't equate to a moat, but if a company grows this quickly and they continue growing to tens of billions of dollars, that equates to a moat. That means they have some competitive advantage. We also know that Duolingo has the huge majority market share in ed tech, meaning educational technology. They own that market, over 60% of the revenue. So Duolingo owns this market. They do have a moat so far. And that moat's currently being challenged by the big tech rival, Google. They've built a language learning application right into Google Translate. And this is what's causing all the questions and discussions about Duolingo. So right now, when I look at this company, it's not a stronghold. Let's be honest here. It's not that proven. It needs
all the fundamentals are up, yet the stock price is down. Good job. He's looking at the fundamentals, right? And to Mike's point, I've never heard this said before. Mike, this is a brilliant observation, right? All stocks are bad and sometimes they act right. Dude, that's really well said. I wonder where you came up with that idea. This is brilliant. Now I see why you're the boss.
It's more of a robust history, and we have new competitors entering into the fields. In fact, I wouldn't even put this one as a castle wall. I'm going to put this one right now as a wood fence. They've certainly had a moat so far. They're growing quickly, but there's still questions about the future, whether or not companies like Google can start carving out their own market share. With those questions and uncertainties, I put them right in the middle. Next up, we have Lululemon. This is the worst performing.
Okay. So he's not saying Duolingo is the best buy of all time. And so we can kind of we'll give him grace in these videos because he's not saying, buy this stock, it's a Lambo. It's going $75 in this stock will retire you, right? We've seen those videos. He's not doing that, and I appreciate that. He's looking objectively at the fundamentals, which fundamentals don't pay. But let's take a look at the next one, Lulu here, right? I really, and here's the other thing, right? How many of y'all watch sports, right? I don't watch sports. In fact, I give no donkey doo-doo about sports whatsoever. In fact, I was just watching this video yesterday and it was talking about how sports is the opiate for the middle class, right? It gives them a distraction to keep them from working on what's important. And I kind of agree with that. Now, if you watch sports, I'm not going to hold it against you, but this is like people who watch sports on stocks, right? Oh, this team has all these great players, and because of all these great players, it must make a great team. But if the team is losing every single game, then who cares? I'm just saying, who cares? No sports anymore. It's all fake. Agree. Yeah, I don't know. Sports is not my thing, and that's fine if it's yours. But the way that these people like cling to a stock, like people cling to a sports team, just I don't know. It's weird to me. But I'm not normal. To be an outlier is not to be normal. So yeah, Lululemon, 4 of 9. But what matters most is that trend of the stock. You really think that it's going to be helping you when it's down at 60 something dollars here, 160? Jeepers creepers, look at this. And by the way, this is why you don't ever want to trade through earnings. If you can avoid trading through earnings, you really should. because it even had a bullish trend riding up into earnings, and on earnings it had a 19% sell-off. 19% sell-off, and ever since that point, it's down. Oh my gosh. Lululemon is down 50% in 64 days. Goodness, that is bad.
Performing company in the S&P 500 year to date. If we look at the price action, it's down 55% so far this year. So not a good year for Lululemon. They've had a slowdown in revenue. They're blaming it on tariffs and other factors, but it's true that right now their sales in North America are slowing down dramatically. Now, maybe this is a bit unfair, but I'm going to put Lululemon in the open field category. I think they're in a highly competitive industry. I don't see any substantial moat. They got brand value, but there's other brands like Alo Yoga and Viore, you name it, competing with Lululemon.
Oh, there we go. Jaime. Oh, by the way, no. Oh, we gotta take a quick break over to the Discord. Jaime, thank you so much for putting the Jamie Ree, Jaime/Jamie. Dude, I want to make sure I say your name correctly. So please, in the chat, please correct me because I love you, man. He yesterday showed off his brand new OVTLYR hat. Look at this. Look at this. I was so excited. Let's go to the original post here. Yeah, there he is. Jamie/Jaime Ree. I'm here for you, my friend. Look at this sick hat. I don't know where he got this hat from, but damn, does that look good on him. That's an even better looking hat than mine. I got mine from the old vendor. Look at that. Look at this dude. Yeah, let's go. Jamie. I got you, Jamie. All right, we're good. We're good.
Lemon. They're having to sue competitors like Costco for selling similar items. This is an incredibly competitive field. They don't have dramatic ownership of this market. And as athleisure becomes increasingly competitive and saturated, you're seeing the struggles with Lululemon. Next up, we have another popular company that's come onto the scenes in just the past year or so, which is
Hims. Bro, Hims gets all the attention lately. Right. And look at these moves up, these huge moves up, these huge moves down. Right. This is a very good stock to trade. Right, because it does give you this volatility, right? I mean, I mean this in all sincerity. This is a beautiful stock to trade because you want volatility. As a trader, you can see the 10/20 price over 50 consistently pays. This is a beautiful stock to trade. Granted, it's gone literally nowhere since February. I mean, price-wise, it's the same price since February. Look at that. Literally same price since February. But man, what a beautiful stock to trade. Let's go over to Hims real quick. Is he picking all the food stamps? So we got a 4 of 9 here. The sector, this is in the staples sector, and the stock is trending down still. I mean, it's trying to recover, but it's still technically got a bearish trend. And still sitting on a sell signal right now. So, you know, say what you want about Hims. This is actually one that you can really, and this is the point of trading, right? Here we go. Pro tip: buy stocks as they're crashing up, not as they're crashing down. Because check this out, and this is such a great example. Look at this. You got the 10/20 price over 50. Goes all the way up. You close when it gets under the 10. That's an 80% gain. You buy when 10/20 over 50, right here. You close when it goes under the 10, which would be right here. Another 63% gain. You buy when 10/20 goes over 50. Let's just say you got in here. Close under here. Another 9% gain. This is a trader's dream. A beautiful, beautiful dream. But that doesn't mean you need to hold on to it. Not at all.
Hims and Hers, the fast-growing telehealth company. It's subscription-based, and they're trying to reinvent pharmaceuticals. Now, there's lots of big, grandiose thoughts and promises and thesis about this company, and it's one that's had dramatically good performance over just the past year or so, up 260%. So it has growth. But growth doesn't always equate to a moat. While most of the metrics are moving up incredibly fast, we can see the revenue growth over time, we can see the total subscribers ticking up every single quarter. These are all great to see. With Hims, I'm still concerned about the long-term defensibility of this business model. There are going to be a lot of competitors, and they're operating in a space that has a lot of litigation, a lot of uncertainties. With all of these type of products that they're selling, They can be recalled, there can be lawsuits. It is very unpredictable what happens in pharmaceuticals. I'm going to put Hims as a picket fence. I think it has a moat. It's growing over time. Maybe it will get to a wood fence soon, but with the market they're competing in, I believe it's very unpredictable. Next, we have Palantir, one of the fastest growing companies in the market.
All right, Palantir. And this is another one of those really tradable stocks. Okay, I'm liking this video a lot more than I thought I would, because I thought it was going to be, oh, buy this stock because it's down kind of videos. We've seen lots of those before. You want to talk about 10 over 20, price over 50? Look at that big, beautiful trend. This is what you dream. These are the type of trends you dream of, right? When it goes over and you can make money, get out of the way. It goes over, you can make money, get out of the way. Dude, this is awesome. So let's go over here to Palantir. You've got 5 of 9. But you know, one of the most important parts, and really the only part that you're going to get paid, is when the trend is going up. And right now, the trend is a downtrend. 10 is under the 20, price is under the 50. Question from Pete. What is the line below on the trading view chart, and how do I add it to my view? Okay, so this down here is called the ATR. This is average true range. I use this for 2 different ways. First, I use this to help me with my position sizing, to make sure that I position size correctly based on volatility. And I also use it as a trigger to know when I'm ready to roll my options. So for example, if right now the price, the ATR is $7.32, once Palantir would go up $7.32, then I could roll my options. And when I roll my options, it is such a ninja hack. And if you have rolled options with me and you have seen just how useful they are, type ninja in the chat. It allows you to keep the trade on, number one, but at the same time, take partial profits and free up capital that you can use to put up more trades. It is such a ninja hack and such a cool thing. But for the meantime, I'm glad you pointed it out. I'm actually going to pop it off the screen. That way it's not in our way and we don't get distracted by it. But yeah, lots of people have seen how ninja hack this is. I love it. I love it. Let's go back to this.
It's at a massive market cap now of almost $360 billion. So Palantir is a massive company by market cap size, and that's on the basis of the rapid growth this company has. Palantir has been able to expand their growth, accelerate it over time faster than investors have expected. They're gaining US customers at a rapid pace. We can see that in the chart here. It's growing 64% year over year. And these customers pay Palantir a lot of money. They have an expensive product. So these are very valuable customers. Palantir also has long-term contractual agreements. They're deeply embedded with the companies or the government that they do business with. They're diversified between customer base and the US government. So overall, the moat of Palantir has continued to grow. Palantir right now has a wide moat, a castle wall. It's not quite a stronghold, but it's getting close. Next up, we have AMD. This is one that often...
Oh, speaking of AMD, we already talked about AMD earlier. Let's go look at AMD over here. And listen, this is one of those weird stocks to me. There are so many, and you know what? If you're watching the replay, you might be one of these AMD bros who says like, oh, AMD is the greatest investment of all time. When it had the 10 over 20, price over 50, when it had, where's that buy signal at? Down here, that buy signal right there on May 5th, 2025. And you can see trading in and out of it all the way up. That was a great time to own AMD. It was not a great time to own AMD all the way down. It is not a great time to own AMD as it runs into this order block and got handily rejected. Now, it is in a new order block down here. We'll see if it can find support, but this is a stock that I would stay far away from. It is a hot mess.
And comes up in conversations when investors have talked about missing out on Nvidia. Well, maybe AMD is a new opportunity. And that's been the investment case for it. One of the critical things that AMD lacks that Nvidia has is this whole ecosystem. Nvidia has CUDA, the code and the ecosystem, the software that supports all their products. They sell everything end to end. So the contracts that Nvidia have box out AMD just by virtue of their entire ecosystem. So right now, AMD has nowhere close to the same size of moat of Nvidia. But that's how the market works, and that's the reason that AMD is a lot smaller of a company than Nvidia. When I look at this one, I'm going to give it a wood fence moat. Now, next we have MSCI. MSCI is a wonderful business.
I'm digging this video because he's not making any recommendations, and he's allowing us to objectively look at the stocks, and it feels like he's objectively looking at the fundamentals. So this is a good collaboration right here. I like this collaboration. All right, looking at MSCI, we've got 4 of 9, and let's dive a little bit deeper into the chart. Oh, by the way, you can make your charts look exactly the same as mine. You can get the free trading view plan and then get the free deep thought indicator, which we offer through our Discord. And your charts will be set up the same as mine. The colors may be a little different, but you can adjust the colors to suit whatever you like. There was a question, I should say, from Sharon. Loving the video. Thanks, Sharon. Appreciate you being here. What does it mean when we say 10 over 20, price over 50? I'm really glad you asked. So, Sharon, let's talk about what this is. This is what I call the outlier trend template. This is the 10 period exponential. And on my charts, it's blue. The 10 period exponential, that's 2 weeks of trading data. The 20 period exponential is the black line. That's 4 weeks of trading data. And the 50 period exponential, that's 10 weeks of trading data. So when the 10, your short term, is under the 20, your intermediate term, and price is under the 50, the long term, that is a bearish trend. That is a bearish trend. And the opposite is true. When it's 10 over 20, price over 50, that is a bullish trend. Now, there are times when you might make a buck or lose a buck, but you will never, ever, ever, ever find a time where it is not in a big, beautiful uptrend with the 10 not being over the 20 and price not being over the 50. It must do that. It is just math. And that's why I can say unequivocally, if you are looking for a stock in a big uptrend, that's what you want to see. And the same thing is true in a downtrend. No stock has ever crashed unless the 10 has been under the 20 and price has been under the 50. And you can see a perfect example right here of a downtrend, perfect example right here of an uptrend. Like I say, it's not perfect, right? It's not saying that when it goes up like this, it's only going to go up to the moon. And when it goes down like this, it's only going to go to zero, right? But it tells you the direction of the way the stock is going. So it's a great question, Sharon. And I'm really glad you're here. Everybody say Sharon in the chat. Welcome, Sharon. Everybody welcome Sharon for coming. I really appreciate you. It's just math. Exactly.
It's one that I've been looking at for a long period of time. It's been on the watch list. And in a lot of ways, it's very similar to S&P Global. You can break down the revenue of this company into these different segments. You have the index business. They have the MSCI World Index, lots of ETFs linking to it. They earn a small fee every time that happens. So you have this business, which is by far the most important. Then, of course, they sell a lot of data. They have customers with analytics. That makes up around the other 40% of the company. Then you have ESG and climate. So it's diversified between these two major segments. I'm going to put this one as a castle wall. It's a very solid moat, fast-growing company, diversified to some extent, but it's not quite as big and robust to become a stronghold. Now, next up, we have United Health Group. This is one that's gone through.
Okay, UNH. I saw somebody in the chat talking about UNH. Let's go to UNH real quick. UNH. All right, UNH has, is that 6 of 9? Yeah. 6 out of 9. We got that buy signal on the 19th, August 19th. And overall, it looks like it's performing. So let's dig a little bit deeper. UNH. Oh, goodness gravy. Here's a perfect example, Sharon. Right? A stock has to go down. I'm sorry, the 10 under 20, price under 50 has to cross down for a stock to crash. All right. It doesn't mean it can't make a big gap down, but I'm saying as it's trending towards zero, it must do that. However, you can see over here, we do have a bullish crossover on this side of the chart over here. And August 19th, let's go ahead and mark that. Here is where the buy signal came in. Now, I got to tell you, I think UNH. Now, granted, this is Chris going beyond what's going on with price. UNH has some huge fundamental problems. Fundamental meaning their CEO just got hunted down. We all remember that. That was a big deal. UNH came out not long after that saying about how I forget exactly the words, but something about like they're having to pay too much out in claims. I'm just saying, like, these are bad people. There's good people and there's bad people, and then there's UNH.
Through a sell-off, we have Warren Buffett entering into a position, but it's still not recovered back to its recent highs. And that's because of the mispricing of many of its plans. This is a simple, straightforward health insurance company, but it's at such a monstrous scale in the United States that it's virtually part of the overall system. It is the system in and of itself. Its networks are so deep and wide that at this point, it's incredibly difficult to disrupt. This is another one that I could put either in the stronghold or the castle wall like MSCI.
I would put them in the gutter. just on business principles, I would put them in the gutter. I have never heard of a worse company than UNH, and I really feel bad for people who are stuck with their health plans. 100% greedy people. Yeah. UNH makes their money by denying refunds to customers dying. That's out of my plan. Yeah. This is the type of company that it doesn't matter who it is. I mean, what I'm trying to say is, like, there's a special place in hell reserved for people like that.
I'm going to put it slightly below the perfect moat because it does face some potential disruptions with challengers to its business model, as well as government intervention. Now, next we have Target, the retailer. This has been one of the most
I know that was pretty harsh. I don't take it back. All right, Target. Target looks really bad. 3 of 9, getting worse by the day, it looks like. Let's zoom in a little bit on Target's chart here. Yeah, Target looks terrible. Let's look over at TGT. Yeah, Target is, I mean, this stock is so bad. I wouldn't even buy it with your food stamps.
mismanaged businesses over the past 5 years. Management had a lot of like woke stuff in their stores that made conservatives mad. Then when there was backlash about that, they
Brandon was on top of it already.
removed it all. It made liberals mad. So they somehow found a way to offend both sides of their customer base. Now neither side likes them. On top of that, they don't know what direction to go with their pricing. Are they premium? Are they value? Do they compete with Costco? Do they compete with Amazon? Their online sales aren't growing as fast. This company,
You know, and since we're not evaluating these on the metrics of like if it's a great buy or not, how often do y'all shop at Target? I don't. I really don't. There's nothing that I need at Target that I can't get from Walmart or HEB or Costco at a better price and similar quality. Honestly, I don't remember the last time I was in a Target or what I was even in there for that I couldn't get somewhere else for better reasons. Just saying.
has faced misdirection and challenge after challenge. Retail is fiercely competitive, and for a company like Target to have any type of moat, they need to be doing something special, something unique. There's other companies in retail that have figured it out, but Target's struggling to. For that reason, I'm putting it in the lowest moat category, which is the open field. Next up, we have everyone's favorite, Tesla. Tesla's a company.
Okay. I am the proud owner of a 2023 Model Y Performance, and I just spent $500 each on 2 sets, or I should say a set of rear tires yesterday that did not last an entire calendar year. That was who was pulling in the driveway yesterday that I had to go meet. By the way, get a mobile tire shop. Good gravy. It is so much better to have somebody come to your house instead of going to Costco or Discount Tire or anywhere else that you're getting your tires put on and waiting there for 6 hours. Dude, not even a whole calendar year on these tires. Give me a break. Give me a break. But yeah, as a Tesla owner, I have a slight soft spot in my heart for Tesla, the company. However, right, it doesn't mean that I'm going to be owning the stock forever. But tell me order blocks don't work. Look at this. Look at this area of support. It loves this area between 323 and 272. Right, it is finding all the buyers it could ever possibly have in this area right here. Oh yeah. Oh my gosh, yeah.
Company that's deeply complex. They're a car company, a robotaxi company, they're a solar company, they're an energy company. They have their hands in many things, but overall, the top line growth has decelerated to a decline. It's now down 2.7% year over year. When we look at the revenue by segment, their vehicle sales are down. BYD, the Chinese EV car seller, is outpacing Tesla dramatically in their car sales now, growing much faster in China and even other places. Tesla, of course, is refreshing their models and they have the Cybertruck, but that hasn't been enough to.
Okay. All right. Sorry, I got stuff in my throat. Cybertruck. In the chat, tell me what you think of Cybertruck, because my opinion on trucks has changed a lot. At one point, I was like, "Wow, that Cybertruck is the coolest thing ever." And where I live, there's lots of Cybertrucks. It's very common to see multiple per day. Now I'm like, I don't think I'd ever get one. I don't think I'd ever get one. But there was a point, there was definitely a point a year ago where I was like, Hang on. Sorry. There was a point a year ago where I was like, oh my gosh, I would love to have a Cybertruck. That'd be so cool. But yeah, it's definitely grown not on me, I guess grown off of me. I don't know. Uh
To refresh their sales numbers. Tesla's valuation is becoming more increasingly justified by future potential bets, like the robotaxi. But when we look at companies like Waymo, we can see that Waymo is the only one that's really growing with paid robotaxi rides. And they're doing it without employees in the vehicle. They're doing it without any catches or caveats. Another one that's testing out robotaxi this year. In fact, they have autonomous rides right now is Zoox from Amazon. Selling vehicles is a highly competitive business, and for Tesla to have a true large moat, it'll need to show that it can run real robotaxi rides without employees or any catches to it. They'll also need to have more of their revenue come from those type of things, not from selling their vehicles. Next, we have S&P Global. Now, this isn't
He's playing the YouTube game on expert mode. Talk about all the stocks the algorithms like and recommend nothing. I like it. S&P Global. Oh man, that's got to be the best stock ever, right? Because they have all the stocks, so therefore it must always go up, right? Right. Actually, S&P Global looks pretty bad. It's got 3 of 9. This could be like objectively the worst on the score over here that we've come across today. I don't remember seeing any other 3 of 9s. But we got the sell signal back on August 20th. Been drifting down ever since then. This is in the financials, as you would expect. Let's go to SPGI. 10's under 20. There you go. Finally, the 50 came up. It did find some support right here. So SPGI might make a comeback. Yeah, this is also another stock that looks super tradable. Look, you could put in here, get out, put in here, get out, put in here, get out. Might make a buck, lose a buck right here. That happens. Get in here, get out, get in here. Yeah, this is a very tradable stock, it looks like, but not one that I'd be buying right now.
the S&P 500, but they are the owners of the indices like the Dow Jones that runs the S&P 500. So they make money anytime an ETF links to the S&P 500. They also make a fortune selling data and analytics. They also, on top of that, have an entire business rating the debt of companies, which the debt markets are dramatically bigger than the equity markets. So S&P Global is a diversified company in all wide moat businesses. They have mission critical data, they have analytics, they have indice business, they have credit ratings on global data. They're like a gatekeeper or a toll booth for all of this information. When I look at this company, it's difficult for me to find one that has a true wider moat. S&P Global is going to be the first stronghold. After that, we have
Wow, how about that? That's so funny because I said of my scores, 3 of 9. Objectively, I mean, Lululemon's chart looked worse, but the financial sector is making this one look worse because it has the breadth. It's got basically everything on the stock working against it, half of the sector working against it. So objectively, if we're talking about charts, not the worst chart, but not all the data that I'd want to see is there. But that's interesting. He ranked it as number 1.
Salesforce, a company that's been under pressure this year.
All right, let's go to CRM. All right, now check it out. All right, 7 of 9 on here with a buy signal just yesterday on CRM. That's actually looks really, really sharp. This could be one of those like second chance opportunities if you missed it yesterday. Not quite over 50 yet though. 10 is oh right. The trend. You got to have the trend. You're not going to get paid until the trend comes through. It's got the 10 over 20. It might have resistance at that point right there, and then it's got some overhead order blocks that might prove some resistance as well. Okay, I take it back. I don't know what I'm talking about. I'm just a random guy on the internet.
It's the biggest loser in my portfolio. Enormously negative sentiment.
Oh, hang on. I'm actually really glad he said that. Now, no offense to you, Joseph Carlson. I love what you're doing in this video, but he just admitted biggest loser in his portfolio. Does anybody see on the chart? Anything about this? Does this remind anybody of anything in particular? I'll give you just a moment to think about it. All right, now I'm going to pull up my slides. And I'm going to show you exactly what I'm thinking about right here when I see this. Hold tight. Does this remind anybody of anything in particular? Brandon's hit that right on the nose. The market cycle. Exactly, Paul. Or like AMD. No, check it out. Like legit. This is this. Look at how perfectly that mirrors. Is that not crazy? Like it even has this double top up here. It even has this double top up here. Now, here's the thing. A lot of people look at a stock like this that's had a big run, and on the downside, right, when it's coming down the slope of hope, instead of the wall of worry, it's coming down the slope of hope, and they're like, "Oh, I need to buy down here because it has to go back up. It should go back up. This is crazy." Look at it perfectly fit in the market cycle. This is crazy. So, what is the market cycle? Your stage 1 is the bottom down here. This is the consolidation period before any moves happen. And this can take years, legitimately years. Stage 2 is the big, beautiful upturn that everybody wants to get, everybody wants to brag about, that they are the ones who found it, right? And that happened between September of 2024 and December of 2024. This 3-month run right here, where it went up, let's go from like here to here, where it went up 35%, right? If you bought it then, you felt like an absolute genius. You couldn't have done anything wrong. Then stage 3 is where the moving averages start crossing over each other. Now notice we talked earlier about what the trend template looks like. Not once in stage 2 did these cross, right? Not a single time. It comes up here, moving averages start crossing over. Now, one of the things that Chris talks about is if it closes under the 10 EMA, that's a red light. Something's not right. You can see several times it closed under the 10 EMA before it really started to break down. So you had lots of warnings right up here. And then stage 4 is the anxiety, denial, panic stage, which is exactly what happened down here. Exactly what happened down here. Man, is that so cool to see exactly the market cycle right there? Super, super cool. So a lot of people buy on this side, buy on stage 4, thinking that it has to go up. And as Joseph Carlson just pointed out, it's the biggest loser in his portfolio. And it most likely happened because he saw it. He tried to buy the dip. As we've talked about, you want to buy stocks as they're crashing up, not stocks as they're crashing down. And unfortunately, you can get stuck in a stock for potentially years before you get back to break even. Wow. I'm really glad that he came up with that one. Now let's look at CRM today. We've got 7 of 9, but it doesn't have the bullish trend as of yet. And like I say, you're not going to get paid until that bullish trend happens.
As growth has decelerated, and there's a lot of talk of software being eaten by artificial intelligence. That's a narrative that's playing out in the market. Now, Salesforce is an incredibly large-scaled company in all different segments. You can see all the various services they have, from the Sales Cloud, Service Cloud, platform. They have a whole apps business, marketing and commerce, integration and analytics, and then they have non-SaaS but professional services as well. This makes up the entirety of Salesforce. Salesforce is a company that I'm going to put in the middle category. It's a wood fence. It's a strong moat, but it's not impenetrable. And there are questions of what's going to happen in the future. Next up, we have Nvidia, the dominant king of the lucrative GPU market.
Yes, Nvidia is class leading, basically. In fact, let's go over to the S&P 500 map. What I like about this is it shows you the bigger that these are. We'll have to do it updates after 15 minutes. Let's do a week. Okay. The bigger that these are, the bigger component they are of the S&P 500, because the S&P is a market cap weighted index. Okay. So Nvidia is the biggest boy on this chart right here. And that's because it has the biggest pull, the biggest market cap of everybody out there. So whatever the Nvidia is doing, the market's going to follow. So let's go look at Nvidia. Oh, well, that's not good. This, just like AMD, has a bearish trend. The 10 is under the 20, price is under the 50. And yeah, this is definitely one that I would stay away from. You've got your sell signal back all the way on August 4th, and it went sideways basically since August 4th. Let's find where August 4th was. It was here, right? It drifted sideways, gave you lots of times to figure out that it might be time to get out. Closes under the 10 EMA. Now it's starting to come down. You know what? This could be a stage 2 and a stage 3 right here. Could totally be.
When we look at the market cap, in fact, it illustrates how much of a distant second AMD is. Nvidia has a $4.1 trillion market cap. AMD's at like 250 billion. They're not even close. Nvidia owns this market. Now, when you look at any of the numbers right now, Nvidia looks like it's the biggest moat in the world because they have the most money, the most revenue, the most operating margins. But the question I have for Nvidia is how durable is this moat over the next 10 or 20 years? It's good right now, but is it just cyclical? Will competitors
So someone in the chat mentioned earlier one of the stocks, and I forget what it was. Apologies for that. The 50-80 rule. Now, I'm not saying Nvidia could have the 50-80 rule happen to it, but it could. Let's talk about what the 50-80 rule is. When you see a stock like this, where it's gone up bigly, right? Where it's had these giant, big, tremendous moves, a lot of people get suckered in. They're like, it has to go up forever. The 50-80 rule is 80% of the time, it'll fall by 50%. And a 50% fall on Nvidia would bring it down to, I got to stretch my scale a little bit here, bring it down to around $83. There's a 80% chance of that happening at some point. A 50% chance of it falling by 80%. That's the 50-80 rule. Anytime you see high flying stocks, there is a chance that things like this that feel like they're impossibly that it's impossible to go down. This is the biggest, most impressive stock out there, the most exciting thing of all time. There's a 50% chance it'll fall by 80% and 80% chance it'll fall by 50%. We don't know when, right? And that 50%, that 80% could start way, way, way higher. But then people move money out of this. The story's gone, the excitement's gone, and the money falls out, and the stock goes back down. By the way, a couple good questions. Quiz asked, why do these two stocks not appear in the program? So we cover 2,600 of the most liquid stocks out there. And if it is one of the most liquid stocks, we require at least 5 years of data, give or take. And if we don't have enough data, then it's not going to be on the platform. But great news is coming, and I'm glad you asked, because in the very near future, every stock in the NASDAQ and every stock in the New York Stock Exchange will be included in OVTLYR. Every single one. Every single one. But caveat here, if we don't have enough data for it, we won't be able to provide the buy and sell signals, nor the fear and greed map, fear and greed heat map for it. But we'll still have it in the platform, so you can still do the research you need to do on it. That's a great question. By the way, somebody asked another question. What is this software using to quickly evaluate the stocks? Is it expensive? Well, I'm really glad you asked. In fact, you're probably asking yourself, what is OVTLYR and how does it work? And I got to find my slide. Hold tight. Wait. I'm totally butchering my my segue. Here we go. What is OVTLYR and how does it work? Right. Well, old Uncle Warren used to say, "Be fearful when others are greedy, and greedy when others are fearful." OVTLYR shows you if investors are acting irrationally fearful or greedy, and by how much. I'm showing you that on all these stocks, right? And this allows you to get in before the OVTLYR move happens. Now, if you're ready to save time, start make money, and start winning with less risk, you can do it just 3 easy steps. Step 1, head over to OVTLYR.com, pick up the annual pass for just 82 cents a day. If you can believe this, just 82 cents a day. And if you're on the monthly plan, you can click the one button right there and save 64% off the monthly price. Step 2 is use the OVTLYR 9, which is so unbelievably easy at this point. It just pops in on your screen, tells you exactly how to rank these stocks. And then step 3 is sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. All right, let's get back to the video here.
competitors start making their own GPUs and chips, Google already has their own custom solutions that dramatically reduces their dependence on Nvidia. Now Amazon's doing the same thing with Trainium. Amazon doesn't want to be paying Nvidia as much as they are, so they're designing their own chips as well. Remember when Intel looked like it had the biggest moat in the world? At one point it was indestructible, but then Apple designed their own chips. They came out with Apple Silicon and they dropped Intel. That was a massive blow to that company. So while Nvidia looks incredibly strong today, there is some long-term durability questions. I put this one in the castle wall category, right below stronghold. Next we have Nike. This is a company that, like Lululemon,
Let's look at Nike. When's the last time y'all bought Nikes? I don't buy Nikes anymore. I buy on clouds. I don't buy any Nike like sports gear. I buy Under Armour. Literally all of my sports gear, my my shirts, my shorts, my backpack, whatever, is all Under Armour brand. I like the Under Armour brand. I don't buy I couldn't tell you the last year that I bought Nike shoes. Yeah, I don't know. So it was so smooth. Have I even done this before? I know. Shut up, Chris. Ozzy Ian says never. It's been years. Yeah, exactly. The kids love Nike and they want nothing else. Ah, not my kids. Not my kids.
Like many of these fashion companies, it relies primarily on brand value, the Nike logo, the history of the company. Nike is a company that, amongst brand value companies, it's one of the best. The Nike logo, in and of itself, is worth so much because of the history of the company. But when I look at this type of business, again, Nike is struggling in its sales. There's other companies that have
Yeah, I believe that. I believe that wholeheartedly. Like, legitimately, the last 6 pairs of shoes I bought have all been on clouds. My wife, same thing. My kids, I take that back. We did buy them some Nikes before school started, and they were in the clearance section at Academy. And my son walked over. He was like, "Oh my god, these are the coolest looking shoes I've ever seen." I'm like, "All right, cool, go for it, dude." But there is a price discrepancy too, right? Like all the on clouds that I've bought have been like at least $160. That's a hell of an expensive shoe. Wearing on clouds at this very moment. In fact, here I'll show you. And these are oldie ones that I use for walking around the neighborhood. $160 shoes right there. Uh, so like Nike is losing out a ton, and I don't really know why. I feel like they've just like peaked and nobody cares about them anymore. At least nobody in my family does.
push their brand value way up. You have companies like Adidas signing major sports figures, which Nike used to own that market. I like Nike, I like the brand, but I think it has a weaker moat than most companies that we're talking about today. It's still good when you compare it to the average company, but we're talking about really top tier companies here. Nike's future growth and the competition they face leaves a lot of questions. Next up, we have Netflix. Now, I'm a little bit biased on.
All right. Have you guys watched was it K-pop Demon Hunters? So that is the most watched show ever on Netflix. And this weekend, Sunday, we have a movie room in our house, and my family and we all gathered around the movie room with the cokes and popcorn and watched K-pop Demon Hunters. And afterward, I was like, okay, that was fun, but like, why is this the most watched video of all time? I don't understand. I don't get it. Why do they love it so much? I don't get it. I don't get it. But it was kind of fun, I guess. I guess it was the catchy tunes. Let's see. We've got a sell signal here on Netflix, and I mean, overall, it's 5 of 9. Not the greatest pick out there. But then again, I feel like Netflix has dropped off. Like I feel like we don't hear about Netflix as far as like the stocks that are always going up anymore. In fact, let's go look at the Netflix chart real quick. Netflix. I don't know why people don't talk about it like they used to. Maybe it's just me. Maybe I'm not hearing it. But yeah, look at this. Huge moves up.
On this one, of course, because it's my largest position. It's my biggest winner. Netflix has been a company that's exceeded most people's expectations, but it's a company that I love for a lot of different reasons. The predictability of the subscription business, the cost structure of the company for paying for content up front and then reaping all the benefits down the road. And they've consolidated all of long form episodic media. They have the content that when you go to the couch, you want to relax on the big screen at night, you usually turn on a Netflix series. This company has won. They won the streaming battle. They have over 300 million subscribers. At this point, it's probably close to 315 million. They're extremely free cash flow positive. They can push money back into content and have this flywheel continue and continue and continue. And as much as their competitors try, despite their best efforts, Apple TV, Amazon Prime Video, Paramount Plus, they're not stopping Netflix. I think given the global scale, the predictability of revenue and income, and the market position that this company has, I believe it's a stronghold. I've said this for years, but Netflix already won this battle, and I think their moat's unassailable. Now, next we have Microsoft. I'm not going to spend.
Microsoft, second biggest on here, I believe. Huge portion of the market is due to Microsoft. Let's go look at Microsoft real quick. I'm digging this video. If you guys are digging this video, type the word dig in the chat. I'm digging this video. I don't mind it. It gives us an opportunity to talk about different stocks and take a look at them objectively. But Microsoft is not great. Microsoft is not great at all. Another stock, another tech sector stock in the downtrends. We've got AMD in a downtrend. We've got Microsoft in a downtrend, and we've got Nvidia in a downtrend right now. What is happening? What is happening? You guys are digging it. You're loving it. Cool. I have no complaints about this.
Too much time on this one. I mean, come on. This company has near perfect fundamentals. Just look at any of them. Everything goes up and to the right. The cash flow, the earnings, the balance sheet is pristine. The shares outstanding go down over time. They return more and more cash. They generate more revenue. They're diversified across all different segments, geographies, customer base. This company has it all. Microsoft is one of the biggest winners over the past 20 years. Microsoft has been so dominant under Satya Nadella.
You're my soda pop, girl. You're my soda pop. I got that one.
And I think that it's going to continue with its supremacy. It is a stronghold. After that, we have Intuit, which is a company that a lot of people underestimate.
INTU. The real Bane, definitely not the hammer donkey. You went through so much effort to change your username just so I could get that joke, and I appreciate that, Mr. Bane. Getting the backhoe out. That's how much I'm digging it. Okay. Thank you very much. That was the best one of the day. Intuit, another tech stock in a big, ugly, nasty downtrend. All right, with the sell signal right there. Oof.
Estimate the moat of. They have enormous dominant market share of do-it-yourself taxes, of small business accounting. Then, of course, they have Credit Karma, which is incredibly fast growing, and they're moving upstream to mid-market. When you put all the pieces together, Intuit has a very wide moat, but it's still a software company. There's still competitors to everything they do. On top of that, we've seen evidence that Intuit's revenue has actually accelerated over the
that is a beautiful chart. Now listen, let's talk about two different types of charts, right? INTU. No, INTU. INTU. Okay. So we back up a little bit. All right. Now, this is a glorious chart. If you work at Intuit and your job is increasing sales, maybe you're chief marketing officer, chief revenue officer, whatever the case is, and your job is increasing sales, this is the kind of chart you want to see. You're going to get paid bonuses on this. This is glorious. Oh my gosh. However, look at this, completely sideways from January 2024 until May of 2025. So it went literally over an entire calendar year and moved 1%. Right. That's why we focus on the stock price and not the fundamentals. Because as beautiful and gorgeous as this chart is, there was a whole year that the market didn't care at all. In fact, no, take it back. We're actually pretty much to that same point right now. We're actually pretty much back to that same point right now and in a big, ugly, nasty downtrend. There you go.
The past year, not decelerated. So it's gone back up to 16%. We're seeing revenue acceleration because,
man, look at, I mean, let's really break that down, right? We're talking January of 2024, which was, I'm gonna draw on this chart. I'm really enjoying this video, by the way. January 2024, I'm gonna say it's roughly here based on the scale to here, right? It looks like it's gone from 16 billion in revenue to 20 billion in revenue. That's like a 20-ish% growth, right? So here's an easy way to do it. New minus old, 20 minus 16. Okay, new minus old divided by old. That's how I learned in business school how to calculate percent change. So it's at 25% growth here, top line revenue growth, 25% top line revenue growth with zero change on stock price. That's pretty sobering right there.
Of artificial intelligence. It is helping this company, not hurt it. Because of how concentrated Intuit is and how many different sectors they compete in, I believe their moat is a castle wall. Next up, we have Meta, a company that when I first did analysis.
By the way, I isn't it funny how in 2021, Meta was like the coolest thing ever, the whole metaverse. Mark Zuckerberg got so suckered in to change everything to call it Meta, and yet now the metaverse is almost a joke. Or if not exactly a joke. Yeah, he definitely jumped the shark on that one here. Let's go look over here, the Meta chart. Not a stock in a downtrend right now. In fact, this is one of the few tech stocks we've looked at. My trading view is slow AF right now. Few stocks that we've looked at actually in an uptrend at the moment. An uptrend at the moment, 4 of 9 on the OVTLYR 9.
on it, I got it wrong. I looked at Meta as a social media company. And on the surface, that may look like what Meta is, but in reality, it's a lot more than that. It's the network by which everyone communicates. It's like the railroads of communication. It's the infrastructure of communication. In fact, I'd look at Meta as more like the class one railroads, like the Union Pacific or Canadian Pacific of communication across different people across the globe. Because when you look at Instagram, Facebook, when you look at Reels, when you look at Threads, all the different assets that they have, they built out the biggest network of communication in the world. Meta goes.
Okay. I actually would like to know in the chat, tell me what is your preferred social media platform? Now, I will put a disclaimer out there. I don't scroll any social media. And that's not any sort of humble brag. It's that I found Twitter to be hella toxic, Instagram to be super fake, not even worth the time going to. Facebook, I don't look at all. My wife does. That's the only thing she looks at. I'm very curious to see what is your particular social choice. Now, to Ryan's point, I watch so much YouTube, it's unbelievable. But I feel like YouTube has anything and everything you could ever want, right? You can go on there and you can watch things that are educational. Like I watch a ton of marketing videos. Or you can go on here and watch stock trading videos, like, you know, somebody in particular. Or you can go on here and watch really fun, like haunted, spooky things like Sam and Colby. I love me some Sam and Colby. I don't know if you know Sam. If you know Sam and Colby, put it in the chat. But yeah, I'm just curious. What is your platform of choice? Patrick loves some Facebook. Ari likes Instagram. Christian likes X and YouTube. Oh yeah, I forgot. It's called X now. That's how little I look at Twitter/X. The OVTLYR Discord. That's a great place to go. Scott Raff says he's a sucker for Instagram Reels. Let's see. Jonathan says YouTube and Facebook to talk with the group of friends. Steve says it's YouTube. I take back my Facebook. Tyson says YouTube. Wild Stimpy Norwood is all the way back on MySpace. Yeah. Steve says the pub is the best social. I agree with you. Very cool, very cool.
Goes firmly in the stronghold category. It's difficult to find a company that has a bigger moat. Now, next we have MasterCard, and you could also bucket Visa into this one as well. My comments would be virtually the same.
All right, let's go to MasterCard. X for the drama, and that's exactly why I stopped going on there. It got way too much for me. I was like, this is not healthy. I was out. Sell signal sitting on MasterCard right now. 5 of 9, so not the worst for sure. Let's see if there's anything on the chart going on with MasterCard. Some overhead order blocks I would definitely be aware of. Still in a bullish trend though.
MasterCard's a company that has so many cards, so many users, so globally diversified, and they're so adapting to different technologies like stable coins or cryptos. They're also including that in their network and settling transactions. When we look at this, they just grow and grow and grow with global economies. When I look at MasterCard, I think it belongs firmly in the stronghold category. Right now with MasterCard or Visa, we just don't see any weaknesses. Next, we have Google, a company where the moat has been the topic of debate for the...
All right, let's go to the Googs. What we got? 7 of 9 on Google. 7 of 9. This could be one of the best ones of the day. Let's go over to Googs. Oh, yeah, that's what I'm talking about. Buy stocks as they're crashing up. Look at that. That's gorgeous. And the buy signal came literally before that big gap up on September 2nd. Did they have earnings or something? No, earnings were back here. What happened? Tell me in the chat what happened on September 2nd or September 3rd, really. Man, that would have been a great signal if you were paying attention to that. I also have YouTube Premium. I don't know if you've noticed, but I got the premiums, baby. It's worth all $15 a month, let me tell you. Yeah, Google actually looks like a really gorgeous place to be right now. Oh, a lawsuit was dropped. Okay. And the Nano Banana. My team uses the Nano Banana. Pretty cool. They won a lawsuit. Oh, okay. Cool.
The past 6 months. A lot of people said that Google is the new Kodak, the new eBay, a company that the moat was being eroded by LLMs like ChatGPT. But Google's done a good job of changing the minds of those commentators by steadily growing every single quarter after quarter. Google's in a fast-moving, highly disruptive industry with lots of changes. Even though the company's incredibly good, it's full stack, from all the infrastructure to the models to the distribution, I still believe because of how fast paced this industry
And this is one of the things where it's like, pay attention to the data, focus in on price, focus in on like the fear and greed, right? Because this fear and greed is growing hard and fast. It's up at 89 out of 100. The sector fear and greed is still up. However, the sector breadth is still trending down. But that's why you focus in on the data, right? Forget the story, just follow in on the data right there. That's a great one.
industry is, because of how many challengers they have, it's not quite at the stronghold level. I think that Google is moving upwards. The moat is getting more strong over time, but I'd put it in the secondary castle wall category. Now, next we have FICO, a company that's also had its moat challenged over just the past few months, as a new government housing official has specifically targeted FICO and their business model.
Is this is this like the credit scores FICO? Hang on. Up in here, you can click this little I button and it will give you information about the company. Yeah, it's not provides products enable business to automate, improve, and collect decisions to enhance business performance. Company operates in 3 segments: applications, pre-configured decision management. Okay, so it is like FICO scores. Okay, it is. Okay, very curious. So big sweeping downtrend that just reversed with the buy signal. 7 of 9 over here. FICO, I mean, for what I can see on FICO looks really good as well. Yeah, big sweeping downtrend that just reversed right here. 10 over 20, price over 50. And that buy signal came through. FICO looks really beautiful as well. Oh, I appreciate you, Corey. Corey, you're too sweet, my friend.
Trying to make changes to introduce more competition. This has caused the stock price to drop, but the revenue continues to grow. When I look at FICO, I think that the moat overall is incredibly strong, but there are some potential weaknesses in the armor. And that is the fact that FICO has raised prices so aggressively and so visibly. It's so apparent that it's drawing a lot of attention. Because as regulators look at this company, they could enact laws and regulations and changes that make this company less profitable. So I'm putting it below the stronghold into the castle wall. We'll see how things pan out over the next year, but right now I think this is appropriate. Next up, we have Equifax. This is a company that I've been investing in.
So we looked at FICO and now we're looking at Equifax. All right, we're looking at all these together here. I like it. EFX. Ooh, this looks pretty rough. You've got 3 of 9 here, sitting on a sell signal. Yeah, Equifax is looking pretty brutal to me.
To recently. I think it's a fantastic company that's diversified. Of course, they're one of the big credit bureaus. So when you get a mortgage, you have to get your credit pulled and they provide that data. But then they also have workforce verification services. So if you're hiring someone or you want to see their work history, you can use their tool to instantly verify their work history. When we look at Equifax and compare it to FICO, Equifax doesn't have quite the monopoly that FICO has, but it also has a more diversified revenue stream and product base. So the dynamics of the moat are different, but I think they're fairly equal. Next up, we have one of my favorite companies. In fact, I've called this one the best business model in the world, and I say that.
Dude, I love Costco. I love Costco. It is a great place. I buy so many clothes at Costco. It's okay, funny story. Mahesh and I were in a meeting the other day, and he was wearing this this button-down, short sleeve button-down shirt that was green with like palm trees on it. I was like, Mahesh, that is a super nice shirt that you're wearing. Mahesh is our CEO, by the way. And I was like, did you get that at Costco? And he goes, yeah. And I was like, I have that same shirt. And he's like, yeah, I think that happens when you get older. You just stop caring about your clothes at Costco. I'm just saying.
That unironically. It's Costco. And if you have a Costco membership, if you've shopped there, you'll know why. Costco's a company where people criticize the moat because it has low margins. And they say that low margins are evidence that the company doesn't have a big moat. While that may be true in most cases, Costco is a unique business in which the low margins are the moat. That's what makes them so difficult to compete with. Nobody can do what they're doing at scale and offer cheaper prices.
Patrick, this may be the longest we've watched a video. It's a 19-minute video, yet we've gone pretty much an hour. I will wrap it up here. But yeah, I didn't mind this video so much because he wasn't pushing shitty stocks and saying, oh, this is the greatest buy ever, right? He's just giving some background on the company, which of course, like, I love stocks. I love trading. I could talk about this stuff all day long. And at no point in time did I feel like rage quitting this video because he's like, oh, this is the worst stock of all time price wise, but you got to buy it, right? So objectively speaking, I really enjoyed this a lot. I am a Costco bro as well as Justin. We'll be Costco bros together. But listen, if you're ready to save time, make money, and start winning with less risk, you got to click one of these two videos. We'll talk soon.